I'm Robert Helms, host of the Real Estate Guys radio program. Joining me today, it is our co-host, financial strategist, Russell Gray.
Hey, Robert. Hey, everybody.
You know, we're not normally live on Facebook, so if we are, there must be a reason. And, the Real Estate Guys, for 23 years now, we've been sharing ideas and information on the radio every week, and we're still on traditional radio. Several years back, the podcast started overcoming the radio in terms of downloads and listenership. Now we're in 190 countries, and things are tough all over. So what we're here to talk about today is how bad times can create great opportunities. And the reason we felt this was important is there's so much negative news out there. And it's not just the election cycle, it's everything that's happened with COVID, first the health crisis, the corresponding economic crisis, and your personal crisis. Maybe you're out of work or your employees have been sent home. I know we've furloughed employees in several businesses. That's no fun. And so in real estate, we're always reacting to what the market gives us. And we've discovered in COVID, there's winners and there's losers. Certain types of real estate have done well, while other types haven't. And yet we think the biggest opportunity is yet to come.
Yeah. So, we've been really stepping up, our content creation because we've, obviously still doing the radio show every week and releasing it as a podcast. That's great. But there's just so much more to talk about. The world is changing so fast. There's so many different things going on. So we've revamped and really beefed up our YouTube channel, and that's going really well. Our Crisis Investing series, Silver series, we have more stuff coming out like that. But we also want to engage with our Facebook audience because we know not everybody is in every place, and talk about some of the things going on because there's so much negative news right now. It is easy just to sit down and go, I'm just going to wait till it all blows over. And
that's such a good point, Russ, because one of our tenets at the Real Estate Guys is that think and do is much better than wait and see. A lot of people are sitting on their hands right now. They're waiting for the coronavirus crisis to be completely over and there to be a vaccine before they think about investing another dollar anywhere. And that's one way to go. But on the other hand, there is unbelievable opportunity if you know where to look. And so thinking and doing is so much more empowering than waiting and seeing.
Yeah. And really, it starts out with just having the flip side of knowing what you're looking for. Robert, you always talk about this reticular activator. I don't know if that's a technical term or real term or what, but, if you think about buying a car, all of a sudden you start driving around and everybody appears to have that car. Well, they were always there. You just didn't see them because you weren't tuned into it. Well, the same is true here. If you have the attitude that bad times mean good times because the flip side of every bad thing happening is an opportunity, then you're going to be attuned to be able to see it. So job number one is just begin to program yourself to believe that there are going to be opportunities in the marketplace. That's number one. And then we can delve into some of the specifics because we see a lot of opportunities. And it's part of what we want to share, have you start thinking about where you can be looking to find these opportunities.
Our friend Robert Kiyosaki says that anybody can make money when the market is going up. It takes somebody sophisticated to be able to make money no matter what the market brings. And if you're a great real estate investor, you can make money in a flat market, in an up market, in a down market. And today, I think we could all argue that we're going to see even more distress in the coming months and years that we've seen so far. So think about everyone who owns real estate right now. Hopefully that's you. You have property of some kind, investment property, not your house, income property. There's three types of owners. Number one are the owners that are in good shape. They can weather the storm. They underwrote correctly. They did the due diligence. They have reserves. They might have a few tenants that aren't paying. They might have some evictions that they can't quite get to yet because of the eviction moratorium, but they're able to weather the storm. And I hope that's you if you own property. Type number two are those that are in some trouble. They're going to need some kind of help. And maybe they're not in imminent danger of losing their property, but the cracks are starting to show. And then the third type are people that are absolutely upside down. They're in trouble. They're about to be don't wanters of real estate. And that could be happening because they own a building that houses a restaurant or a gym, and those businesses are shut down and there's no income coming in. Or it could be just because they've reached a place where they're like, you know what, it's time for me to be out of this thing. And so of those three types, numbers 2 and 3, that's a lot of opportunity for real estate investors. You may be able to come alongside somebody and lend them a hand, if you will, for some sort of economic participation. And if you're positioned to do that, that could be a great opportunity to get in on a property that has a lower basis, that's up and running, that might need some of your capital or just your expertise. And then for folks that are going to have to get rid of the properties, hey, you know what? We always say there are no problem properties, there's only problem ownerships.
Exactly. I mean, if you're not prepared to weather the storm, that was some of the big lessons we learned in 2008, right? We were part of that collection of people that weren't really prepared for what was coming. So there's going to be another collection. So times like these shake quality assets out of weak hands. And it's where weak people learn how to be strong next time around. They're getting the lesson. Meanwhile, those assets come available to people who are aware, prepared, brave, and bold. And we think those are the character qualities you have to have and you should be working on right now. The other thing that happens is it triggers a lot of activity and support from big powers, right? The government has come in and spending a lot of money and doing a lot of things with the PPP loans and things that, yes, everything didn't work out great. Everything's moving very fast, but still a lot of money flooding into the market. The Federal Reserve lowered interest rates right away, is printing money, is making money available to lend. So there's a lot of stimulus going on, and a lot of that stimulus ends up in quality assets. And when people are afraid in markets like this, they gravitate towards things they consider safe. You see it a little bit with bonds, certainly with gold, but you're going to see it in real estate because real estate is one of those things that is real and essential. Not all real estate. Some real estate is going to be a problem, but some real estate is going to be actually in very high demand because it performs very well in times like this.
Something else that bad times do is it creates fear, uncertainty, and doubt. And that is when people get petrified of making a move. They're back to wait and see. And it's easy to understand that as you're hearing all this, as you're experiencing it. It's difficult to get through that. But I'll tell you what, if you watch successful investors, they can get through level-headed and figure out what makes sense, what doesn't, and you're less emotional about it. When the market's going down, you got to be careful not to catch a falling knife. But also keep in mind, the real estate market is not a market. In fact, every market is local. And there are opportunities, even right now, that are great opportunities. And again, we're likely to see opportunities in the weeks and months ahead. And we're going to talk about today some ways to maybe take advantage of that. So I think that's one of the big things is that it creates this fear in people's mind.
Yeah, and it makes people change, and that can be good and bad. But when you anticipate the way people are going to change, businesses start to behave differently, politicians start to behave differently, people, citizens start to behave differently, and they move their jobs, they move their businesses, they move their money. And when people start moving around and money start moving around, if you can anticipate what those moves might look like, I mean, you don't have to be a rocket scientist to see that people are fleeing high tax, high cost, difficult to do business in states for states that are low cost, low tax, and easier to do business in. I mean, we've been talking about that for a long time and preparing to be in those markets to receive everybody when the inevitable happened. And here we are. And sure enough, those markets are all booming. So that's the type of thing that we're talking about. When you understand what's happening, you're going to realize there's going to be winners, there's going to be losers because people change in reaction to what's going on.
And COVID exacerbates that. We've already seen these trends going on. As you mentioned, Russ, we've been talking about these trends for years. Now you've got the fact that people aren't so sure they want to be in big cities and touching the common elevator button and all those things. So we're definitely seeing a trend at secondary and tertiary markets. And when there are real estate trends, that means there's opportunities, and back to winners and losers. You can't control what the properties are that you own right now. You pick those markets, you pick those properties based on those set of circumstances that were around when you bought the property. But zero-based thinking means knowing what I now know, would I make the same decision again? And so you may have properties you're going to try to liquidate, but you also may be looking forward to where there is opportunity. And there are big opportunities now. One of the things about real estate is it's real. We are big proponents of real assets, things that are tangible, not things that are paper derivatives. I mean, sure, I know a lot of people have money in the stock market or through mutual funds or ETFs, and that's fine if you understand that, but that's a very volatile, very scary market in a lot of ways. And yet real estate, at the end of the day, think about this. In your town, can you think of a building that used to have a business in it, that the business is no longer there? The business went out of business, but the real estate is still standing. Real estate stands the test of time. Now, not all real estate is created equal. That's why we don't just say go out and buy something, be strategic. And today you have to be strategic about which types of real estate are going to be the most resilient.
Yeah, I think, the obvious one is affordable residential, right? Because people may not shop in stores, they may not work in offices, They might not go to malls. There's a lot of things that change in terms of real estate, but one thing that is common, one thing that is stable, one thing that is as permanent can be, is that people are going to need homes to live in. And if the economy continues to struggle, and the all likelihood it's going to, even if wages and prices are going up, that the end of the day, people's net purchasing power isn't. They're going to need affordable housing. And so affordable residential real estate is probably going to be a winner. Markets that are more affordable than other markets, products that are more affordable than other products within a market, price points within a market that are more affordable than others. I mean, you always have people that are a little bit better off above you at your price point, that as times get tough, they gravitate down and put demand in underneath your price point. If you're at the very top of the market, if you're pushing the edge for your product niche, or if you're in an expensive market, then I think you're living dangerously, because growth is at the margin, but so is recession. And when things recede, people who are at the margin are going to feel it. So affordable residential real estate in affordable, high quality marketplaces is probably going to be a big winner coming through this.
Well, another thing we like about residential, we said this in our book, Equity Happens 15 years ago, is that when there's a challenge in the housing market, the government will step up. And we've seen that happen. We saw it happen in 2008, and we're seeing it happen now. Much of the money that went out in stimulus, the $1,200 and $600 and all those payments that went out, much of that ended up in the hands of landlords. We know from talking to many of our apartment managers and apartment owning friends that those tenants were helped immeasurably by that, and they were able to pay. This weekend, I got to talk to a couple of owners of large number of units, but more than 10,000 doors. Okay, so that's a lot. Overall, with 10,000 doors, 98% occupancy. That's pretty awesome. Paid occupancy. So yes, there are definitely people that aren't being able to pay and they're going to be evicted and so forth, but that's not everybody. You can be really strategic, and we think residential is great. We love apartments, even single family houses, but it's not the only type of real estate. One of the most resilient types of real estate is really the use real estate has had for nearly the longest time of anything, and that's agriculture.
Yeah, when it goes back to what's real and essential, people need to eat. And what's great about it is people need to eat all over the world. So it doesn't really matter where the people are or where the prosperity is. Whereas if you're investing in residential real estate or any type of real estate, you got to get the local economy right. But with agriculture, you need to get the crop right, and you need to be in something that, is going to end up, you have to have a business model that makes sense. And it used to be that was just, so far out of the mainstream. When I first got started in real estate investing, it would never occur to me in 1,000 years to buy farmland, and especially farmland offshore. But after going through 2008 and seeing the benefit of having some of the assets offshore, I thought, wow, that makes sense. And then understanding that it really is kind of a global world, and the rise of the big populations in the East, it's like, well, how do you get in on that? I'm not going to buy rental property in China or India. How do I profit from that? Well, I can buy agriculture. It's not just food, too. It can be timber. Lumber is used all around the world, and other products that grow, and they grow whether the economy, doesn't matter. They don't care. The sun comes up and they just grow. And if you're invested in these things, they're typically long-term investments, not always, but a lot of times they're long-term investments. You're going to find out that your equity, your net worth is growing as these crops just grow, and you get into these through large pools with other investors and professional management. But it's definitely something to be taking a look at in today's environment.
Yeah, and the great thing about agriculture is that today there are lots of folks where you have put together programs where you can buy a part of a farm, because it's really hard to figure out the science of soil and know what to plant and the equipment and all that. I mean, that's a job, that's an industry that you can participate today passively in farmland, and it's pretty awesome. Last year, at the end of the year, I got a chance to go to Paraguay and see up close and personal rows and rows and rows of orange trees, and year after year planting, and you could see the trees that were 2 years old and 3 years old and 4 years old. It was so dramatic to be there, standing there going, wow, I get it. This is turning dirt into dollars. So agriculture, definitely something to consider, because as you said, Russ, people got to eat.
Yeah, well, I mean, and it's a capital intensive business, which means there's an opportunity for investors. And there's really a big opportunity offshore, because some of these countries don't really have a lot of sophistication yet Some do, and some are transitioning, but it means that they need a lot of capital in order to bring in modern equipment, modern science, modern production, get better yields out, and they have to do that. So whereas some of the opportunities, I mean, the very first time we met Donald Trump, we were at a land expo in Iowa, and it was we were there to learn about farming. And one of the things we found out was it was harder to invest in agriculture in the United States because of the regulation and how developed it was. But if you went outside where there was still some upside, it's almost like a value add opportunity. But the point is, anywhere that there's a viable opportunity that requires capital to develop the opportunity, there's an opportunity for investors to provide that capital and get in on the action. And food production is going to be something that is going to be very, very stable no matter what's going on in the world.
So if you listen to the real estate guys for a while, you know we talk more than just real estate. We believe that before you're a real estate investor, you're an investor. And also it's compared to what? You got to see how real estate performs versus other asset classes. We always come home to real estate. We think real estate is arguably the best investment, especially for average folks to be able to get way ahead in their financial lives. But we do look at the bigger picture and we talk about things like energy. And energy is big news today.
Yeah, well, it really is big news. And I think it's maybe one of the biggest opportunities a lot of people have no idea how to get in on. And it really is just the last few years of our annual investor summit, especially when we started doing the future of money and wealth, and we really started hanging around with people like Chris Martenson from Peak Prosperity, and we understood the role of energy in economic growth. If you understand that our system requires exponential growth to support growing debt because it's a debt-based system, that's premise number one. Number two is, in order to grow the economic growth to keep the debt service, you're going to need to consume energy. And so, the train wreck that Chris is concerned about is at some point you run out of energy, but until you do, the energy becomes scarcer and scarcer and therefore more expensive. Well, if you understand that where we're at right now, the economy is under a temporary lockdown, which means demand for energy is way down. And so the prices collapsed. So you have to ask yourself, is that a temporary situation or is that a permanent situation? Well, we're putting more and more debt into the system to try to plug the holes created by the downturn. At some point, you're going to have economic growth to service that debt, which is going to require huge consumption of energy. And if you have an opportunity to get involved with the energy when the prices are suppressed, there's a huge opportunity. And I promise you that a lot of investors aren't thinking of it that way, especially real estate investors, because they don't understand. But if at the end of the day, energy pretty much comes out of the ground, so it's a real estate play, and you can own property that produces energy or is related to energy production, and that gives you an opportunity as an investor.
Well, think of it this way from a real estate perspective. When you buy an income property, you buy and pay for and receive two things, the property and the income. And so we value properties, maybe not single family homes, but commercial properties, large residential properties. We value them based on a multiple of their income. The higher the income, the more the property's worth. If I find a building where just by chance a lazy landlord has kept the rents really low, the multiples aren't as good. I can buy that building cheaper than the building next door where the landlord has kept the market rate. That's how energy works. And right now, the value of land, whether it's ownership or leasing land in places that there are oil and other natural resources, is valued based on what can be brought out of the ground and its price today. And so when you have depressed oil prices, it's great when we go to the pump, right? It's great for your tenants. It helps them afford your rent. But it means that the right oil move can be to buy some of those properties at a much reduced rate because they're proven in terms of the findings of the ground. They know they have oil. They know they can bring it out. And the price is going to change in the future, which will affect the price. So it's beyond the scope of us to talk anymore about it. But just before you tune out and go, well, oil, what does that have to do with real estate? It's very similar. I think another opportunity is going to come in distribution. I don't mean in doing the distribution, but if we think about how products, goods, and services move throughout the country, especially products and goods, there's a big play there.
Yeah, well, I mean, we started talking about this. Kenny McElroy, after 2008, really taught us the importance of picking your market strategically based on what was going on in the economy. And back then, he was very pro-energy. And the reason he was very pro-energy is because where we were at in the development cycle, and he felt like those were jobs that were going to be linked to the geography where they were. You weren't going to export oil drilling to China. You had to do it wherever the oil was. And so U.S. oil markets were what he was looking at. So we sat down and looked at that and thought, well, what else is like that? Well, distribution is like that because no matter where the products are made, Mexico, China, India, it doesn't matter where they're made. At the end of the day, if there's 300 million people in the United States and growing, and there is, then they're going to need to consume products, which means products are going to have to move from wherever they're made to where they're consumed. And so the ideal geographies for distribution to population centers, that is location, location, location. And so if you can buy property that are in or around these ideal distribution hubs, then you have a good chance. And so we picked many, many markets coming out of 2008 that were like that. They all turned out to be great markets for exactly those reasons. Well, they call COVID-19 the great accelerator, right? I mean, the Amazon effect was already going on and people were already buying more online and there were more and more shipments coming. But man, they just put the pedal to the metal and supercharged it. And so one of the great areas of real estate investing has been distribution properties, but also markets and distribution towns. So you can do affordable residential in a distribution town. And that can be a winner, winner, chicken dinner too.
Well, it sure can. And there's nuances of that, right? I mean, you might buy the very land that an Amazon fulfillment center sits on. Okay, well, there you're directly in that. But you also might look for safe, clean, affordable housing in those areas that those people that work in that factory or that distribution center are going to need. But there's more to it than that. See, infrastructure for distribution is hard to change and hard to move. And a lot of the markets, Russ, that you're talking about, you have years of infrastructure. Take Memphis, right? A market that has the FedEx hub, and that airport comes alive at night with all the FedEx planes. And even though fewer passengers are traveling through that airport, more packages are. And so that infrastructure cannot be easily moved. And that's a thing to be thinking about when you're making your best guess or your best bet on where you should invest. So we're not here to tell you any one way or one place or one type of real estate. We believe in think and do, and that starts with think. You don't need us to do the thinking for you to tell you what to do. Now, some people want to be told what to do, but you're not going to get that from the real estate guys. We like to put out a lot of ideas and information, not advice, ideas and information for you to decide. But there are a couple of things we're going to keep our eye on, if you will, and this will also play into where the puck is going.
Yeah, well, again, we just went through this COVID-19 thing, and one of the things that came out was, gee, all these PPE, our personal protection equipment is being manufactured, and our meds are being manufactured in China. So we have all kinds of things that we actually need that are really important that are manufactured someplace else. That's not just bad economics, that is bad national security. And I think that there's probably enough of a bipartisan support now to begin to bring some of that manufacturing back. So there's marketplaces that have been dormant, been latent. And, if you combine that with the idea that manufacturers like to be near distribution centers so they can distribute their products, right? You don't have to be a rocket scientist to think, okay, it takes a lot of space to be able to build a distribution center. To be able to build a manufacturing facility. So I'm going to need someplace where the land is relatively cheap, someplace where it's relatively close to distribution, and there's a decent labor pool nearby that I can draw upon, right? And so if you look for markets that kind of check those boxes, now I'm not saying that all this manufacturing is coming back to the States yet. That's why we're saying it's something we're watching, but it's definitely something we think could begin to break. And so we've got our ear to the ground. So if you're listening to the show, if you're following us on Facebook, if you're subscribing to our newsletter, if you're subscribed to our YouTube channel, some way, shape, or form, we will find a way to tell you as these things begin to get closer. But it's definitely something we're watching right now.
And I think we're watching as opportunity zones, right? We've done a couple shows on this. We certainly talk about this at our live events, whether they're in person or virtual. And opportunity zones are a big deal. Now, the reason we have to watch is that which is all part of the Trump tax plan, and depending on the way the election goes, it might change.
Yeah, and so I think the opportunity zones take a little while, for people to understand where they are, and it's about a mass migration of money and enterprise with a long-term commitment into these specific geographies, and it takes time, to move all those things in place. And I think that this whole COVID thing hit right about when these things, I think, were probably starting to come to fruition. And so they've been stalled a little bit. Now, if Trump gets reelected and continues to push that, I think it's going to be a big part of his recovery program. We'll see. If Biden gets elected, We don't know if he's going to unravel the whole thing, if it's already got momentum. I mean, nobody knows what's going to happen. So that's why it's a wait and see, as you said, Robert. But I still think it's something worth paying attention to because it's a pretty powerful incentive.
Well, it is, and there's ways to be involved with opportunity zone deals, whether you're a passive or active investor. So, and these are typically long deals. So, although there's some stalling, these are 10-year and longer deals for the most part. So, as an investor, you approach any type of investment, real estate or otherwise, in terms of time horizon. Sometimes you have money you want to put to work for a season. Sometimes you want to just buy something that's going to have cash throw off for years. That's all part of personal investment philosophy. Now, we said we're not going to give you advice, but if you were to ask us, what do we think the single best opportunity in real estate is today? Well, then we're going to tell you. In fact, we're going to tell you even if you didn't ask. And this is really combining a couple of things, the power of real estate investing and the power of entrepreneurship.
Yeah, I mean, if you think about it, the way people get rich is they either make a lot of money doing something and invest it wisely in something that can really outpace inflation and withstand downturns. And real estate is a proven asset class or investment vehicle for getting that done, especially when you enter leverage into the mix properly, prudently. And then, of course, if anybody that's ever made a lot of money, knows that the easiest way to make a lot of money is to start a business, to run a successful business. Well, if you can combine those two activities into one activity, instead of earning money at your day job and then investing your savings, in your spare time on the nights and weekends, right? That's like having two full-time jobs. Uh, I think most people who are doing that ultimately hope that they can become a full-time investor and they can quit their day job. A lot of people get started in real estate investing so they can do that. But if you combine the two and create a business where you're actually go out and raising money and investing your money along with other people's money, and that's your business, now you're both making money and investing money in the same 40, 50 hours a week that you would work a normal job. You get your personal time back and you're not limited to your own savings. You can invest really an unlimited amount of money, as much money as you can raise from other people. Now, the system is being flooded with money right now, and people need their money to work for them to subsidize what they're not getting through businesses that have slowed down or incomes that have slowed down or inflation that's rising. Whatever it is, people are going to need to find a way to outpace inflation and earn extra money. And if they have capital, they're going to be looking to put it to work. There's a huge, huge opportunity right now for real estate entrepreneurs to help people put that money to work.
We call it syndication. And syndication is simply a business where a fund manager is a syndicator, an organizer, a sponsor, we call those folks. They raise capital from private investors and find an investment that makes sense. It's not just in real estate. Most major motion pictures are syndicated. A lot of business ventures are syndicated, where you have somebody who comes up with the idea and the vision and puts the pieces together, but they don't happen to have the $2 million it takes to start the business. So they go to friends and other folks to raise capital. And so there's two sides of this to get in on. You could be the passive investor. And what you do is rather than take a chunk of money and buy a property where there's headache and maintenance and vacancy and turnover, you're busy earning money, you're digging what you're doing. You just put some of that capital to work with a team that is proven to create returns through real estate. You can generally be part of better and bigger deals, deals with better return, deals with better safety margin, right? And you're investing with someone who has experience. So that's the passive side. The big opportunity we see today is on the active side for you to be the person that puts that together. Now, of course, you don't just jump into that business. It takes a little bit of training, a little bit of study, a little bit of thought, but you've probably already got some of the things that it takes to be successful. You're already successful in real estate, many of you, and you've got a niche or a market or a team put together. That's something that you can leverage. So syndication just means aggregating the efforts of others towards one common goal.
Yeah, I mean, if you think about it, Warren Buffett, I tell the story at The Secrets of Successful Syndication when I'm explaining kind of the foundation of what syndication is. But Buffett started out with $100 of his own money. That was his initial investment in Berkshire Hathaway. And then he went and raised $10,000 each from several wealthy doctors that he knew. And of course, Buffett's 90 years old. So back then, $10,000 was a lot of money. And then he took it upon himself to be the guy that did all the heavy lifting, studying and underwriting and doing the due diligence and managing the money on behalf of the investors. And he got a piece of the action. He got some fees up front for doing the work and hiring the people who were going to help him do the research and all of that. And then his big thing was profit sharing on the back end. And that's kind of the way any fund on Wall Street works. A lot of people in real estate investing don't understand. You can do the same thing in real estate, and that's what real estate syndication is. You can be a Warren Buffett for real estate. And so, to your point, Robert, earlier, I mean, if you already know how to do something really well, maybe you're a great project manager, you're already a successful real estate investor, you know a niche. But here's the thing, when you syndicate, you get economies of scale, which means you don't have to know how to do everything yourself. In fact, it's better if you don't. The only thing you really have to know how to do is put it all together, right? If you say, okay, I need somebody to go raise money, I need somebody to go find the deals, I need somebody to manage the deals, I need somebody to do the bookkeeping, I need somebody to do the investor relations and all that, right? And then you own the business. Ultimately, that's what owning a business as an absentee owner. You don't start out as an absentee owner, but you focus your time and attention on getting it built. And then you can be in the business to the extent you want to be, doing what you want to do. And in the beginning, you learn a little bit about everything, but a lot of people think they have to know how to do all these things all by themselves. And it's not that way at all. It's actually easier to go bigger than it is to try to invest small. And I wish we could get more people to understand that sooner, because when people finally, the light bulb goes off, they're like, oh my gosh, why didn't I do this 5 years ago? Why didn't I do this 10 years ago? They just don't know. It's so foreign to the way they think. But we're hopefully opening your eyes. If you're one of those many people out there who is looking at your industry or the financial path that you're on, or maybe you've already lost your job or your business doesn't have a future, and you're like, hey, I like owning my own business, but there's no future in whatever this business is. I need a new business. I need something to do where I can make real money and do something I enjoy. I think you ought to take a look at syndicating. Take a good hard look at it, because it's a great business and people are having great success, and it works really well in environments just like this.
You know, most people either make their money or keep their money in real estate. It's a proven wealth vehicle. And if you just put aside a little bit of money every month, live below your means, build up some down payments, buy some properties in 10 or 20 or 30 years, you're going to be happy. You're going to have a bunch of properties. It is the slow but secure path to wealth. The great thing about syndication is it collapses timeframes. First of all, it's not dependent upon your ability to qualify and your ability to earn the money. A lot of us get the bug in real estate. I mean, there's some investors, they just passively invest, and that's not what they're excited about, but they do that, building a financial fortress around their family. That's awesome. But some of us are deal junkies. We get the bug. We get good at it. We find great teams and great markets and great product types. I'm like, you know what? I could do more, but I'm kind of, deployed. I don't have any more capital. Well, syndication solves that problem. It lets you go to folks who don't have the expertise and the time and the relationships that you have, and they have money, and they say, hey, what if I put some money into your deal, you did the work, and we split it on some basis? That's the essence of syndication. What's really cool about it is that collapsing of timeframes. No longer do you have to say, well, I could be wealthy 30 years from now. We have a student who just 5 years ago started his syndication business, 5 years ago. Today, he just last month passed $200 million that he's raised in 5 years. Now, that's an extraordinary result. We've got other folks raise 160, 140, 85, 65, 10, 5. Raising money is the core competency, and all it is a transfer of enthusiasm, doing great business with high integrity and showing people how they can become part of what you're doing.
Yeah, you're sharing. I mean, you're out there, you're like, I'm spending time. Like you're sitting here watching this. You've watched this all the way through, right? There are a whole lot of people out there that are busy running their businesses, or they're professionals, or making a lot of money. They don't have time to sit and watch this. They don't have time to go figure out what markets are good or how to do deals. So they throw their money to Wall Street, and Wall Street gambles with it, basically. And then if it goes bad, then the government, the taxpayers, bail them out. So I'm not a big fan of Wall Street. Whereas this is where it's Main Street investing in Main Street. So if you're a Main Street investor, want to be a Main Street investor, and you want to help other people take advantage of what real estate can be and do, especially in a market like this is really one of the best businesses you could take a look at. So we did something. We put together a collection of many of the radio shows, podcasts that we've done in the past on the topic of syndication. Nothing for sale. It's free. You can listen to the shows, and we interview real life syndicators, and it goes back for years. So you can hear them talking as they're going through, the recovery from 2008 and the economic cycles. And we continue to do those interviews. And if you're on the list, when we do one, we'll let you know. But if you send an email to ultimate@realestateguysradio.com, ultimate at realestateguysradio.com. We will
That's
send you.
because it's the ultimate collection of syndication podcasts. So
Exactly.
ultimate at realestateguysradio.com. Plus, you'll get to know some real folks that are doing the thing. My favorite thing, evidence of success. It's one thing when you guys on the radio say it, but it's something else when a real person you can relate to started with a modest means and went and grew. And we've got so many of those people and love those stories. So if syndication sounds like it's interesting, whether it's passive on the passive side or the active side, you might want to step up your real estate business. And that's a great resource for you. Just send an email to ultimate@realestateguysradio.com.
So I think that's a wrap as far as I'm concerned, Robert. I think we've said our piece. I encourage people to take a look at it and thank everybody for their time. Please share this with people. I think you have the ability to do that. Again, we're the real estate guys, not the tech guys. So, sometimes we don't exactly get that right. But we just think right now the world needs some good news. They need to feel like there's some opportunity out there. There's some hope. There's a lot. There's a lot in real estate. There's a lot in syndication, whether you're a passive investor or an active investor. It's definitely something worth taking a look at. Thank you so much for your time and attention today.
Thanks, everybody. For those of you watching on Facebook Live, happy Monday. For everybody else, we'll see you on the radio.
Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right. Thanks so much, and we'll see you in the next video.